Angela, a 28-year-old veterinary technician, was searching for affordable tax preparation services when she encountered a preparer who would test her knowledge of legitimate tax filing and teach her valuable lessons about identity theft through fraudulent tax services. She responded to an advertisement promising maximum refunds and instant filing for just $75. Angela had always prepared her own taxes using online software, but was interested in professional help after starting a side business grooming pets and wanted to ensure she was claiming all eligible deductions for her new entrepreneurial activities. The advertisement she saw online featured testimonials from satisfied customers who claimed to have received refunds thousands of dollars larger than expected, along with promises of same-day filing and guaranteed maximum refunds for all clients. Angela called the number in the advertisement and spoke with tax professional Martinez, who immediately assured her that his service could maximize her refund and handle all aspects of her tax preparation for significantly less than major tax preparation companies. Ms. Chun, our specialized tax preparation service focuses on finding every possible deduction and credit to ensure that our clients receive the maximum refund available under current tax laws, Martinez said with apparent tax expertise and refund maximization knowledge. We guarantee that we'll find more deductions than you would discover on your own and get your refund processed faster than any other tax service in the area. Martinez explained that his office could prepare Angela's taxes immediately if she brought her tax documents, and that he specialized in business deductions that would significantly increase her refund from her new pet grooming activities. Ms. Chun, small business owners often miss valuable deductions that can result in refunds of $3,000 to $5,000 more than they would receive with basic tax preparation. Martinez continued with apparent small business tax expertise and deduction identification knowledge. Our service specializes in finding business deductions that other preparers overlook, which is why our clients consistently receive larger refunds than they expect. Angela scheduled an appointment and visited Martinez's office, which appeared professional with tax law books and IRS publications displayed throughout the waiting area and preparation rooms. During the appointment, Martinez reviewed Angela's tax documents and immediately claimed that she qualified for numerous business deductions and credits that would result in a refund of $4,200, which was significantly more than Angela had calculated using online tax software. Martinez requested Angela's social security number, bank account information, and previous year's tax return to complete her current year filing and maximize her refund through advanced tax preparation techniques that weren't available through standard tax software. Ms. Chun, maximizing business deductions requires access to your complete tax history and banking information to ensure that all eligible expenses are properly documented and claimed according to IRS requirements. Martinez explained with apparent tax preparation procedures and documentation requirements knowledge. Professional tax preparation involves comprehensive review of your financial situation to identify every possible deduction and credit. Angela was excited about the large refund, but felt uncomfortable about providing her complete financial information, especially since Martinez was requesting access to her bank account and previous tax returns for what seemed like routine tax preparation. I'm not comfortable providing my bank account information and previous tax returns for basic tax preparation, Angela explained to Martinez. Can you prepare my current year taxes without accessing my banking information and previous returns? Martinez became insistent when Angela questioned the information requirements, claiming that professional tax preparation required comprehensive financial review and that limiting access to her financial information would prevent him from maximizing her refund. Ms. Chun, professional tax preparation involves detailed analysis of your complete financial picture to ensure maximum refund optimization. Martinez insisted with apparent comprehensive preparation procedures and refund maximization requirements. If you don't provide complete financial access, I can only prepare a basic return that won't include the business deductions and credits that could increase your refund by thousands of dollars. Martinez also claimed that bank account information was required for electronic filing and refund processing, and that providing previous tax returns was necessary to ensure consistency and avoid IRS audit triggers. Angela felt pressured by Martinez's claims about missed deductions, but decided to leave without completing her tax preparation and research legitimate tax preparation requirements before providing extensive financial information. Angela contacted the IRS directly to verify tax preparation requirements and learned that legitimate tax preparers only need current year tax documents and don't require access to banking information beyond account numbers for refund deposits. Angela also researched Martinez's credentials and discovered that he was not enrolled with the IRS as an authorized tax preparer and had no professional tax preparation certifications or licensing. Angela realized that Martinez was using fraudulent tax preparation services to collect personal financial information that could be used for identity theft and potentially filing fraudulent tax returns using her stolen information. Angela reported the fraudulent tax preparation service to the IRS, the Federal Trade Commission, and her state's Attorney General office. She learned that unlicensed tax preparers often promise unrealistic refunds to attract clients and then steal personal information for identity theft purposes. The authorities explained that legitimate tax preparers are enrolled with the IRS, provide clear credentials, and don't require extensive financial information beyond what's necessary for accurate tax preparation and refund processing. Angela learned that taxpayers should always verify tax preparer credentials through IRS databases and should be suspicious of any preparer promising guaranteed large refunds or requesting extensive financial information beyond current year tax documents. The experience taught Angela to research tax preparer credentials and to be cautious of any tax service making unrealistic refund promises or requesting more personal information than necessary for legitimate tax preparation. Angela now educates other veterinary professionals about tax preparation fraud and emphasizes the importance of working only with IRS-enrolled tax preparers who provide transparent credentials and realistic expectations about refund amounts. Derek, a 35-year-old restaurant manager, received a phone call about unclaimed tax refunds that would test his understanding of legitimate IRS procedures and teach him valuable lessons about fake government refund scams. The caller claimed to represent the IRS Refund Recovery Division and insisted that Derek was entitled to $3,400 in unclaimed refunds from previous tax years. Derek had filed his tax returns on time for the past several years and had received his expected refunds through direct deposit. So he was surprised to learn about supposedly unclaimed refunds that he hadn't received. The caller, who identified himself as IRS Agent Thompson, claimed that processing errors had prevented Derek's refunds from being distributed properly and that the IRS Refund Recovery Division had been established to locate taxpayers with unclaimed refunds. Mr. Wilson, our records show that you have $3,400 in unclaimed tax refunds from 2020 and 2021 that were not distributed due to processing errors in the IRS computer system, Thompson said with apparent IRS authority and refund processing knowledge. The IRS Refund Recovery Division was created to identify and distribute these unclaimed refunds to eligible taxpayers before they're transferred to the Treasury Department's Unclaimed Funds Program. Thompson explained that the unclaimed refunds were the result of IRS processing system upgrades that had caused some refunds to be calculated incorrectly, resulting in underpayments that taxpayers weren't aware of until the errors were discovered during system audits. Mr. Wilson, the IRS system upgrade in 2020 caused calculation errors that resulted in some taxpayers receiving smaller refunds than they were actually entitled to. Thompson continued with apparent IRS system knowledge and error correction procedures. The Refund Recovery Division reviews these cases and ensures that taxpayers receive the additional refund amounts that were underpaid due to system processing errors. Thompson offered to process Derek's unclaimed refund immediately if he could verify his identity and provide payment for processing fees required by federal regulations governing unclaimed refund distribution. Derek was interested in receiving additional refunds, but was suspicious about paying processing fees to receive money that was supposedly owed to him by the IRS, since he believed that legitimate IRS refunds didn't require fees. I don't understand why I would need to pay fees to receive refunds that are owed to me, Derek explained to Thompson. Can you send me written documentation about these unclaimed refunds so I can verify the information before paying any processing fees? Thompson became urgent when Derek requested documentation, claiming that unclaimed refund processing had strict deadlines and that written documentation would take too long to process before the refunds were transferred to unclaimed funds programs. Mr. Wilson, federal regulations require unclaimed refunds to be distributed within 30 days or transferred to the Treasury Department's Unclaimed Property Program. Thompson insisted with apparent regulatory deadlines and distribution procedures. If we don't process your refund immediately, it will be transferred to unclaimed property, and you'll need to file complex paperwork with the Treasury Department to recover your money, which can take 6 to 12 months. Thompson requested Derek to pay $275 in processing fees through prepaid debit cards or wire transfer to expedite the refund processing and ensure that Derek received his unclaimed refunds before the transfer deadline. Derek felt pressured by the deadline claims, but decided to hang up and verify the unclaimed refund information directly with the IRS through their official customer service channels. Derek called the IRS using the official phone number from their website and learned that no IRS Refund Recovery Division existed and that the IRS never charges processing fees for legitimate refund distribution. The IRS representative also explained that any legitimate refund issues would be communicated through official IRS correspondence sent by mail, not through unsolicited phone calls claiming unclaimed refunds. Derek realized that Thompson was fraudulently impersonating an IRS agent and attempting to collect processing fees for refunds that didn't exist by creating false urgency about unclaimed funds and government deadlines. Derek reported the IRS impersonation scam to the Treasury Inspector General for Tax Administration, the Federal Trade Commission, and his local police department. He learned that fake IRS refund scams are common and often target taxpayers by claiming processing errors or unclaimed funds. The authorities explained that the real IRS never calls taxpayers about unclaimed refunds and never charges fees for refund processing, and that legitimate tax issues are communicated through official written correspondence. Derek learned that taxpayers should always verify IRS communications by contacting the agency directly through official phone numbers and should never pay fees to receive refunds that are supposedly owed by the government. The experience taught Derek to be suspicious of any unsolicited call claiming government refunds and to always verify IRS communications through official channels rather than trusting callers who claim federal authority. Derek now educates other restaurant workers about IRS impersonation scams and emphasizes that legitimate IRS communications follow established procedures and never involve unsolicited calls claiming unclaimed refunds or processing fee requirements. Melissa, a 41-year-old school librarian, received an email about free tax preparation services that would test her knowledge of legitimate community programs and teach her valuable lessons about tax preparation scams targeting low-income individuals. The email claimed she qualified for free professional tax preparation through a community tax assistance program. Melissa had limited income as a school librarian and was interested in free tax preparation services that could help her maximize her refund while ensuring accuracy in her tax filing, especially since she had some education-related deductions to claim. The email appeared to be from a local community organization and included information about free tax preparation services available to individuals with incomes below $50,000, along with promises of professional preparation and maximum refund guarantees. Dear Ms. Foster, you qualify for free tax preparation services through the Community Tax Assistance Program available to residents with annual incomes below $50,000. The email stated with apparent community service authority and income-based eligibility requirements. Our volunteer tax preparers are trained to maximize refunds and ensure accurate filing for qualified community members who need assistance with tax preparation. The email explained that the program was funded by federal grants and local community organizations to provide professional tax preparation services to low-income residents who couldn't afford commercial tax preparation fees. The Community Tax Assistance Program receives federal funding through the Volunteer Income Tax Assistance Grant Program and donations from local businesses to ensure that all community members have access to professional tax preparation regardless of their financial situation. The email continued with apparent funding source knowledge and community program administration. Our certified volunteer preparers receive extensive training to provide the same quality service available at commercial tax preparation companies. The email instructed Melissa to schedule an appointment by clicking a link that would direct her to the program's website, where she could complete pre-preparation paperwork and schedule her free tax preparation session. Melissa was interested in free professional tax preparation, but wanted to verify the legitimacy of the Community Tax Assistance Program before providing personal information or scheduling appointments through email links. Melissa decided to research legitimate free tax preparation programs in her area and discovered that authentic VITA programs are administered through official IRS partnerships with established community organizations. Melissa contacted the IRS to verify whether the Community Tax Assistance Program was a legitimate VITA site and learned that no such program was registered as an official volunteer tax preparation location in her area. Melissa also discovered that legitimate VITA programs are listed on the IRS website and operate through established community centers, libraries, and nonprofit organizations with proper IRS oversight and volunteer certification. Melissa realized that the email was from scammers who were using fake community tax assistance programs to collect personal tax information from low-income individuals who were seeking free tax preparation services. Melissa clicked on the link in the email using a secure browser and discovered that the website requested extensive personal information, including social security numbers, banking information, and previous tax returns before allowing appointment scheduling. Melissa realized that the fake tax assistance program was designed to steal personal tax information that could be used for identity theft and fraudulent tax return filing using victim information. Melissa reported the fraudulent tax assistance program to the IRS, the Federal Trade Commission, and her local library's Community Services Department. She learned that scammers often target low-income individuals by offering fake free services that collect personal information for identity theft. The authorities explained that legitimate VITA programs operate through established community partnerships with proper IRS registration and never request extensive personal information through email links or unsecured websites. Melissa learned that taxpayers seeking free tax preparation should use the IRS website to locate legitimate VITA sites and should be suspicious of unsolicited emails claiming free services that require personal information before appointment scheduling. The experience taught Melissa to verify community tax programs through official IRS resources and to be cautious of any free service that requests extensive personal information through email communications or unsecured websites. Melissa now educates other school staff about fraudulent tax assistance programs and emphasizes the importance of using official IRS resources to locate legitimate free tax preparation services rather than responding to unsolicited emails claiming community assistance programs. Ricardo, a 33-year-old construction worker, encountered a tax preparer who would test his knowledge of legitimate tax procedures and teach him valuable lessons about refund loan scams and predatory tax preparation practices. He visited a storefront tax office that advertised instant refunds. Get your money today. Ricardo needed his tax refund quickly to pay for car repairs required for his daily commute to construction sites, and he was attracted to advertisements promising immediate access to refund money rather than waiting for IRS processing. The tax preparation office appeared busy with multiple customers and prominently displayed advertisements for instant refund loans and same-day money access for tax filers who needed immediate cash. Ricardo spoke with tax specialist Rodriguez, who immediately assured him that their instant refund loan program could provide immediate access to his expected refund for a small processing fee. Mr. Santos, our instant refund loan program allows you to receive your tax refund today instead of waiting 2 to 3 weeks for IRS processing, Rodriguez said with apparent tax loan expertise and immediate access benefits. For a processing fee of just $89 plus a small percentage of your refund amount, you can walk out today with cash in hand instead of waiting for the government to process your return. Rodriguez explained that the refund loan was actually an advance against Ricardo's expected refund, and that the loan would be repaid automatically when the IRS processed his actual return and issued his legitimate refund. Mr. Santos, the refund loan is completely risk-free because it's secured by your actual tax refund that the IRS will issue after processing your return. Rodriguez continued with apparent loan security knowledge and risk-free lending procedures. The loan company receives repayment directly from the IRS, so there's no risk to you, and you get immediate access to money that's already yours. Rodriguez prepared Ricardo's tax return and calculated a refund of $1,850, then offered him an instant loan of $1,600 for processing fees of $89 plus 18% of the loan amount, which would total $377 in fees for immediate access to his refund money. Ricardo was surprised by the high fees, but was pressured by his need for immediate cash and Rodriguez's assurance that the fees were standard for instant refund services. "The fees seem high for just getting my own money a few weeks early," Ricardo explained to Rodriguez. "Are there any alternatives that would cost less or allow me to wait for the regular refund without these additional charges?" Rodriguez became insistent when Ricardo questioned the fees, claiming that instant refund loans were the only way to access refund money immediately and that the fees were set by federal regulations governing tax refund lending. "Mr. Santos, instant refund loans are regulated financial products with fees set by federal lending laws," Rodriguez insisted with apparent regulatory knowledge and lending fee requirements. "If you want immediate access to your refund, this is the only legal way to get your money today, and the fees are standard across all tax preparation companies that offer refund loans." Rodriguez also claimed that waiting for the regular IRS refund could take 6 to 8 weeks, and that immediate access was worth the additional fees for people who needed their money quickly for important expenses. Ricardo felt pressured by the claims about extended IRS processing times, but decided to research refund loan costs and IRS processing timeframes before agreeing to pay high fees for early access to his refund. Ricardo contacted the IRS directly to verify processing times for electronic tax returns and learned that most refunds are issued within 2 to 3 weeks, not the 6 to 8 weeks claimed by Rodriguez. Ricardo also researched refund loan costs and discovered that the fees Rodriguez was charging represented an annual percentage rate of over 300%, making the loan extremely expensive for just a few weeks of early access. Ricardo realized that Rodriguez was using predatory lending practices to charge excessive fees for early refund access by misrepresenting IRS processing times and loan fee structures. Ricardo contacted Rodriguez to decline the refund loan and request preparation of his tax return for normal IRS processing, but was told that the tax preparation fee would be $150 without the refund loan, compared to the $89 fee with the loan. Ricardo reported the predatory tax preparation practices to the IRS, the Consumer Financial Protection Bureau, and his state's Attorney General office. He learned that refund loan scams often target low-income taxpayers who need immediate access to their refunds for essential expenses. The authorities explained that legitimate tax preparation involves transparent fee disclosure and that refund loans often involve extremely high interest rates that make them very expensive compared to waiting for normal IRS processing. Ricardo learned that taxpayers should compare the total cost of refund loans with the benefits of early access and should be suspicious of any tax preparer who misrepresents IRS processing times to justify expensive loan products. The experience taught Ricardo to research tax preparation fees and refund loan costs before making decisions about early refund access, and to verify IRS processing times independently rather than relying on tax preparer claims. Ricardo now educates other construction workers about predatory tax preparation practices and emphasizes the importance of understanding the true costs of refund loans compared to waiting for normal IRS refund processing. Jennifer, a 26-year-old dental assistant, received a text message about tax filing assistance that would test her knowledge of legitimate tax software and teach her valuable lessons about fake tax preparation apps and identity theft through fraudulent tax services. The text claimed she could file her taxes for free using a new mobile app. Jennifer had been using online tax software for several years, but was interested in mobile apps that might make tax filing more convenient, especially since she had straightforward tax situations with just W-2 income and standard deductions. The text message claimed to be from Easy Tax Mobile and promised completely free tax filing through their new smartphone app that could complete tax returns in under 10 minutes using photo capture of tax documents. File your taxes free in minutes. Easy Tax Mobile app makes tax filing simple. Just photograph your W-2 and we'll handle everything else. Download now. Link. The text message stated with apparent convenience and time-saving benefits. The message included a link to download the app and emphasized that the service was completely free with no hidden fees or upgrade requirements, making it an attractive option for simple tax filing needs. Jennifer was intrigued by the convenience of mobile tax filing and clicked the link to download the Easy Tax mobile app from what appeared to be a legitimate app store listing with positive reviews and professional design. The app appeared well-designed with intuitive navigation and clear instructions for photographing tax documents and entering basic personal information to complete tax return preparation and filing. Jennifer began using the app by photographing her W-2 form and entering her personal information, including Social Security number, birth date, and bank account information for refund direct deposit as requested by the app setup process. The app processed her information quickly and displayed a completed tax return showing a refund of $890 that would be deposited directly into her bank account within 7 to 10 business days after electronic filing. Jennifer reviewed the completed return and was satisfied with the accuracy and simplicity of the mobile filing process, so she authorized the app to submit her return to the IRS for processing. However, several weeks after filing through the app, Jennifer received a notice from the IRS stating that her tax return had been rejected due to her Social Security number already being used on another return filed earlier in the tax season. Jennifer contacted the IRS to resolve the rejected return and learned that someone had already filed a fraudulent return using her Social Security number, claiming a large refund that had been issued before her legitimate return was submitted. The IRS representative explained that Jennifer's personal information had likely been stolen through an illegitimate tax preparation service, and that she would need to file an identity theft affidavit and paper return to resolve the fraudulent filing. Jennifer realized that the Easy Tax mobile app was a fake tax preparation service designed to steal personal information for tax fraud, and that her tax information had been used to file fraudulent returns claiming refunds before her legitimate return was processed. Jennifer reported the fraudulent tax app to the IRS, the Federal Trade Commission, and the App Store where she had downloaded the fake application. She learned that fraudulent tax apps are common and often appear legitimate with professional design and fake reviews. The authorities explained that legitimate tax software companies are registered with the IRS and provide clear contact information and customer support, while fraudulent apps often disappear after collecting personal information during tax season. Jennifer learned that taxpayers should only use tax software from established, IRS-authorized providers and should be suspicious of unsolicited text messages promoting new or unknown tax preparation services. The experience taught Jennifer to verify tax software providers through official IRS resources and to be cautious of mobile apps that request extensive personal information without providing clear company information and customer support. Jennifer now educates other dental office staff about fraudulent tax preparation apps and emphasizes the importance of using only established, IRS-authorized tax software for electronic filing rather than downloading unknown apps promoted through text messages. Anthony, a 39-year-old postal worker, encountered a tax preparer who would test his understanding of legitimate tax advice and teach him valuable lessons about fraudulent tax scheme promotion and aggressive tax avoidance scams. The preparer claimed he could help Anthony avoid paying taxes through legal loopholes and offshore strategies. Anthony had been paying substantial taxes on his postal service income and was interested in legitimate tax planning strategies that could reduce his tax burden while ensuring compliance with all applicable tax laws and regulations. Anthony visited a tax preparation office that advertised tax elimination services and legal tax avoidance strategies, with testimonials from clients who claimed to have eliminated their tax obligations entirely through advanced planning techniques. The tax preparer, who identified himself as tax strategist Williams, immediately claimed that Anthony was paying far more taxes than required, and that specialized strategies could reduce his tax liability to zero while remaining completely legal. Mr. Rodriguez, most taxpayers pay excessive taxes because they don't understand the legal strategies available for tax elimination through proper business structuring and offshore planning, Williams said with apparent tax strategy expertise and legal avoidance knowledge. Our advanced tax elimination program can restructure your income to eliminate your federal tax obligations while maintaining full compliance with IRS regulations. Williams explained that Anthony could establish a series of business entities and offshore accounts that would legally shelter his postal service income from federal taxation through legitimate business expense deductions and international tax treaties. Mr. Rodriguez, the wealthy and corporations use these exact strategies to eliminate their tax obligations, and the same techniques are available to individual taxpayers who understand how to structure their finances properly. Williams continued with apparent wealth management knowledge and corporate tax strategy expertise. Our tax elimination program provides the same advanced strategies used by high-net-worth individuals and multinational corporations. Williams offered to implement the tax elimination strategy for Anthony for an upfront fee of $2,500 plus ongoing management fees of $500 per month to maintain the business structures and offshore accounts required for ongoing tax avoidance. Anthony was interested in reducing his taxes, but was suspicious about claims that he could eliminate his tax obligations entirely, especially since he was a federal employee with straightforward W-2 income. I'm interested in legitimate tax reduction, but eliminating all taxes seems unrealistic for someone with regular employment income, Anthony explained to Williams. Can you provide documentation about the specific legal strategies and IRS regulations that allow complete tax elimination for federal employees? Williams became evasive when Anthony requested specific documentation, claiming that the tax elimination strategies were based on advanced interpretations of tax law that required specialized expertise to implement properly. Mr. Rodriguez, tax elimination strategies involve complex legal interpretations that go beyond basic tax preparation. Williams insisted with apparent advanced expertise and specialized knowledge claims. The strategies are completely legal but require careful implementation by experts who understand the sophisticated tax planning techniques used by wealthy individuals and corporations. Williams also claimed that providing detailed documentation about the strategies could compromise their effectiveness if the information became widely available to other taxpayers or tax authorities. Anthony felt uncomfortable with Williams' evasiveness about documentation and decided to research tax elimination strategies and verify whether the claimed approaches were legitimate before paying substantial fees for tax planning services. Anthony consulted with a CPA who specialized in federal employee tax issues and learned that claims about complete tax elimination for W-2 employees are typically fraudulent schemes that can result in serious penalties and criminal charges. Anthony also researched the specific strategies mentioned by Williams and discovered that many aggressive tax avoidance schemes promoted as legal are actually abusive tax shelters that the IRS actively prosecutes. Anthony realized that Williams was promoting fraudulent tax schemes that could result in substantial penalties, interest, and potential criminal charges if implemented, despite his claims about legality and compliance. Anthony contacted Williams to decline his services and learned that Williams became aggressive and claimed that Anthony was missing a rare opportunity for financial freedom through advanced tax planning. Anthony reported the fraudulent tax scheme promotion to the IRS, his state's Attorney General office, and the Better Business Bureau. He learned that aggressive tax avoidance scams often target middle-income taxpayers with promises of eliminating tax obligations through supposedly legal strategies. The authorities explained that legitimate tax planning involves reasonable deductions and strategies that don't promise complete elimination of tax obligations for employees with regular income sources. Anthony learned that taxpayers should be suspicious of any tax strategy that promises to eliminate all tax obligations and should always verify tax planning advice with qualified professionals who provide clear documentation about proposed strategies. The experience taught Anthony to research tax planning strategies independently and to be cautious of any tax advisor who makes unrealistic promises about tax elimination or refuses to provide clear documentation about proposed strategies. Anthony now educates other postal workers about fraudulent tax scheme promotion and emphasizes the importance of working with legitimate tax professionals who provide realistic advice about tax planning rather than promising unrealistic tax elimination results. Sharon, a 44-year-old bookkeeper, received a letter about tax resolution services that would test her knowledge of legitimate IRS debt resolution and teach her valuable lessons about tax debt relief scams targeting taxpayers with outstanding obligations. The letter claimed she qualified for IRS Fresh Start program, assistance that could eliminate her tax debt. Sharon had fallen behind on her tax payments during a period of reduced income and owed approximately $8,500 to the IRS for several tax years, which she had been working to resolve through payment arrangements with the agency. The letter appeared official with government-style formatting and claimed to be from National Tax Relief Services, representing taxpayers in IRS Fresh Start program applications that could reduce or eliminate outstanding tax debts. Dear Ms. Parker, you may qualify for tax debt elimination through the IRS Fresh Start program that allows eligible taxpayers to settle their tax obligations for significantly less than the full amount owed. The letter stated with apparent IRS program knowledge and debt reduction authority. Our tax resolution specialists have helped thousands of taxpayers reduce their IRS debts by an average of 78% through proper application of Fresh Start program benefits. The letter explained that the Fresh Start program was designed to help taxpayers who were struggling with tax debt and that qualified applicants could settle their obligations for pennies on the dollar through offers in compromise and other debt reduction strategies. The IRS Fresh Start program provides multiple options for tax debt resolution, including offers in compromise, currently not collectible status, and installment agreement modifications that can significantly reduce the total amount you owe to the IRS. The letter continued with apparent program option knowledge and debt resolution expertise. Our certified tax resolution specialists understand the complex application procedures and can maximize your chances of approval for maximum debt reduction. The letter offered Sharon a free consultation to review her tax debt situation and determine her eligibility for Fresh Start program benefits that could potentially eliminate her entire $8,500 tax obligation. Sharon was hopeful about reducing her tax debt, but wanted to verify the legitimacy of National Tax Relief Services and understand the actual requirements and benefits of the IRS Fresh Start program before scheduling consultations or agreeing to representation services. Sharon contacted the IRS directly to inquire about the Fresh Start program and learned that while the program exists, it involves specific eligibility requirements and doesn't typically result in the dramatic debt reductions claimed in the letter. The IRS representative explained that offers in compromise are available but require detailed financial analysis and are only approved when taxpayers truly cannot pay their full tax obligations based on their assets and income capacity. Sharon also learned that taxpayers can apply for Fresh Start program benefits directly with the IRS without requiring third-party representation or paying substantial fees to tax resolution companies. Sharon decided to call National Tax Relief Services to inquire about their fees and services and learned that they charged $3,500 upfront plus monthly fees for representation services that she could potentially handle herself through direct IRS contact. Sharon researched the company online and discovered numerous complaints from customers who had paid substantial fees without receiving the promised debt reductions, and that many tax resolution companies use misleading advertising about IRS programs. Sharon realized that National Tax Relief Services was using misleading information about the Fresh Start program to attract customers who owed tax debt and then charging substantial fees for services that taxpayers could pursue independently with the IRS. Sharon contacted National Tax Relief Services to inform them that she had verified their services as unnecessary, but received aggressive sales calls attempting to convince her that professional representation was essential for successful debt resolution. Sharon reported the misleading tax debt relief advertising to the IRS, the Federal Trade Commission, and her state's Attorney General office. She learned that tax debt relief scams often target taxpayers with outstanding obligations by promising unrealistic debt reductions through legitimate IRS programs. The authorities explained that legitimate IRS debt resolution programs are available directly through the agency, and that taxpayers should be suspicious of companies charging substantial fees for services that can be pursued independently. Sharon learned that taxpayers with IRS debt should contact the agency directly to discuss resolution options and should be cautious of companies that promise dramatic debt reductions for upfront fees without guaranteeing results. The experience taught Sharon to research IRS programs independently and to be suspicious of companies that use official-sounding program names to market expensive services that may not provide promised benefits. Sharon now educates other bookkeepers about tax debt relief scams and emphasizes the importance of working directly with the IRS for debt resolution rather than paying substantial fees to companies that make unrealistic promises about debt elimination. Michael, a 31-year-old firefighter, encountered a tax preparer who would test his knowledge of legitimate tax credits and teach him valuable lessons about fraudulent tax credit claims and refund inflation schemes. The preparer claimed Michael qualified for numerous credits that would result in an unusually large refund. Michael had relatively simple taxes with W-2 income from the fire department and was expecting a modest refund based on his withholdings and standard deductions, but the preparer claimed he was eligible for thousands of dollars in additional credits. The tax preparer, who identified himself as Credit Specialist Johnson, reviewed Michael's basic tax information and immediately claimed that he qualified for multiple tax credits that would increase his refund from $800 to $4,200. Mr. Thompson, most taxpayers miss valuable tax credits because they don't understand the complex qualification requirements, Johnson said with apparent tax credit expertise and qualification knowledge. Our specialized credit identification process ensures that you receive every credit you're entitled to under current tax law, which typically increases refunds by $3,000 to $5,000 for qualifying taxpayers. Johnson claimed that Michael qualified for education credits, business expense deductions, and dependent care credits that weren't apparent from his basic tax documents but could be claimed through careful analysis of his personal situation. Mr. Thompson, tax credits are often overlooked because taxpayers don't realize that many personal expenses qualify as legitimate business deductions or educational investments that generate substantial tax credits. Johnson continued with apparent credit application knowledge and expense categorization expertise. Our advanced credit analysis identifies legitimate claims that other preparers miss due to inadequate training in credit qualification procedures. Johnson prepared Michael's return claiming education credits for online courses Michael had taken for professional development, business expense deductions for his commute and work equipment, and childcare credits for expenses that Michael hadn't actually incurred. Michael was surprised by the large refund, but was concerned that some of the claimed credits didn't seem to match his actual expenses or circumstances, especially since he didn't have children and hadn't paid childcare expenses. "I don't have children, so I'm not sure how I can claim childcare credits," Michael explained to Johnson. "Also, the education and business expenses seem higher than what I actually spent on professional development and work-related costs." Johnson became dismissive when Michael questioned the credit claims, insisting that his specialized training allowed him to identify legitimate credits that taxpayers typically overlooked due to complex qualification requirements. Mr. Thompson, tax credit qualification involves complex legal interpretations that allow credits for various personal and professional expenses. Johnson insisted with apparent legal interpretation expertise and qualification complexity. Child care credits can be claimed for various dependent care situations, and education and business credits apply to many expenses that taxpayers don't realize qualify under current tax regulations. Johnson also claimed that questioning the credit claims could result in missed opportunities for legitimate refunds, and that his professional expertise ensured all claimed credits were fully defensible under IRS audit procedures. Michael felt uncomfortable with Johnson's explanations and decided to research the specific tax credits being claimed on his return before authorizing filing with potentially fraudulent credit claims. Michael contacted the IRS to verify the qualification requirements for the credits claimed on his return and learned that many of the credits required specific circumstances and expenses that didn't apply to his situation. Michael also discovered that claiming fraudulent tax credits could result in substantial penalties, interest charges, and potential criminal prosecution for tax fraud, regardless of whether the false claims were made by tax preparers. Michael realized that Johnson was inflating his refund through fraudulent credit claims that could expose Michael to serious legal and financial consequences during IRS audits or investigations. Michael contacted Johnson to request correction of his tax return to remove the fraudulent credit claims, but was told that changing the return would require additional fees and would reduce his refund to the smaller amount he originally expected. Michael reported the fraudulent tax credit preparation to the IRS, his state's tax agency, and local law enforcement. He learned that refund inflation schemes often target taxpayers by promising large refunds through false credit claims that expose taxpayers to penalties and prosecution. The authorities explained that legitimate tax credits have specific qualification requirements and that taxpayers are ultimately responsible for the accuracy of their returns regardless of preparer errors or fraudulent claims. Michael learned that taxpayers should verify tax credit qualifications independently and should be suspicious of any preparer who claims credits that don't match their actual circumstances or expenses. The experience taught Michael to understand tax credit requirements and to question any preparer who makes dramatic changes to expected refund amounts through credits that don't clearly match his actual circumstances and qualifying expenses. Michael now educates other firefighters about fraudulent tax credit schemes and emphasizes the importance of verifying tax credit qualifications independently rather than accepting preparer claims about credits that seem inconsistent with actual taxpayer situations. Linda, a 37-year-old pharmacy technician, received a robocall about tax audit assistance that would test her knowledge of legitimate IRS procedures and teach her valuable lessons about fake audit defense scams targeting taxpayers with audit anxiety. The automated message claimed she was under IRS investigation and needed immediate legal representation. Linda had never been audited by the IRS and had always filed accurate tax returns with the help of reputable tax software, so she was alarmed to receive an automated message claiming that she was under federal investigation for tax violations. The robocall message sounded official with government-style language and urgent warnings about immediate legal consequences if she didn't contact the IRS Audit Defense Department within 24 hours to resolve serious tax violations. This is an urgent message from the IRS Audit Defense Department regarding federal tax violations detected on your account. The automated message stated with apparent government authority and legal investigation urgency. You must call 1-800-555-0298 immediately to avoid arrest warrants and asset seizure proceedings that will begin within 24 hours if you fail to respond to this official notification. The message emphasized that Linda's tax account showed serious irregularities that required immediate legal representation and that failure to contact the Audit Defense Department would result in criminal charges and immediate asset seizure by federal agents. Linda was frightened by the threats of arrest and asset seizure, but was also suspicious about receiving such serious legal threats through an automated phone message rather than official written correspondence from the IRS. Linda decided to call the number provided in the robocall to understand the nature of the alleged tax violations and determine what actions were required to resolve the supposed audit investigation. The person who answered identified himself as IRS Investigation Supervisor Davis and immediately confirmed that Linda was under federal investigation for tax evasion and required immediate legal representation to avoid criminal prosecution. Ms. Mitchell, your tax account shows evidence of unreported income and fraudulent deductions that constitute federal tax crimes, Davis said with apparent investigation authority and criminal tax knowledge. The IRS Criminal Investigation Division has opened a case against you, and you need immediate audit defense representation to negotiate a settlement and avoid criminal charges. Davis explained that Linda's case was serious enough to warrant federal prosecution, but that his audit defense team could negotiate with the IRS to resolve the case through civil penalties rather than criminal charges if she retained their services immediately. Ms. Mitchell, the IRS is prepared to file criminal charges against you, but our audit defense team has successfully negotiated thousands of cases to civil resolution, saving our clients from prison sentences and criminal records. Davis continued with apparent negotiation expertise and case resolution experience. We can begin representing you immediately if you authorize our services before the criminal referral is processed by the Department of Justice. Davis requested immediate payment of $2,800 for audit defense services and representation in negotiations with the IRS Criminal Investigation Division to resolve Linda's case through civil settlement rather than criminal prosecution. Linda felt panicked by the threats of criminal charges, but was also confused because she couldn't understand what tax violations she might have committed that would warrant federal criminal investigation. "I've always filed accurate tax returns and can't understand what violations you're claiming," Linda explained to Davis. "Can you provide specific information about the alleged unreported income or fraudulent deductions that are causing this investigation?" Davis became evasive when Linda requested specific information about the alleged violations, claiming that discussing case details over the phone could compromise the investigation and that immediate representation was required before detailed information could be shared. "Ms. Mitchell, ongoing criminal investigations involve confidential information that cannot be discussed until you have legal representation," Davis insisted, with apparent investigation procedure knowledge and confidentiality requirements. "If you don't retain our audit defense services immediately, the case will proceed to criminal prosecution, and you'll face much higher legal costs and potential prison sentences." Davis also claimed that the 24-hour deadline for response was set by federal prosecutors and that missing the deadline would result in automatic criminal charges being filed against Linda. Linda felt pressured by the deadline and criminal threats, but decided to hang up and verify the investigation directly with the IRS through their official customer service channels. Linda called the IRS using the official phone number from their website and learned that no investigation or audit was pending against her, and that the IRS never initiates contact through robocalls or threatens immediate arrest for tax issues. The IRS representative explained that legitimate IRS audits and investigations are communicated through official written correspondence, and that the agency never uses automated phone calls to threaten taxpayers with immediate legal action. Linda realized that the robocall and follow-up conversation were part of an IRS impersonation scam designed to frighten taxpayers into paying for unnecessary audit defense services based on fabricated tax violations and criminal threats. Linda reported the IRS impersonation scam to the Treasury Inspector General for Tax Administration, the Federal Trade Commission, and her local police department. She learned that robocall audit scams are common and often target taxpayers during tax season when audit anxiety is highest. The authorities explained that legitimate IRS communications follow established procedures and that taxpayers should never pay for audit defense services based on threatening phone calls claiming immediate legal consequences. Linda learned that taxpayers should always verify IRS communications through official channels and should be suspicious of any automated message or phone call claiming immediate legal threats related to tax issues. The experience taught Linda to recognize IRS impersonation tactics and to always verify audit or investigation claims through direct contact with the IRS using official phone numbers and procedures. Linda now educates other pharmacy staff about IRS impersonation scams and emphasizes that legitimate IRS communications follow established procedures and never involve threatening robocalls claiming immediate legal consequences. Robert, a 42-year-old truck driver, encountered a tax preparer who would test his understanding of legitimate business deductions and teach him valuable lessons about inflated expense claims and fraudulent business deduction schemes. The preparer claimed Robert could deduct far more business expenses than he had actually incurred. Robert operated as an independent contractor for several trucking companies and had legitimate business expenses including fuel, maintenance, and equipment costs that he wanted to deduct properly on his tax return. The tax preparer, who identified himself as business tax expert Martinez, immediately claimed that Robert was missing thousands of dollars in legitimate business deductions that could significantly increase his refund beyond what he expected. Mr. Williams, independent contractors typically miss 70% of their legitimate business deductions because they don't understand the complex rules for expense categorization, Martinez said, with apparent business tax expertise and deduction maximization knowledge. Our specialized business deduction analysis can identify $8,000 to $12,000 in additional deductions that most drivers overlook due to inadequate record keeping and tax knowledge. Martinez claimed that Robert could deduct his entire vehicle payment, all meal expenses, clothing costs, and home office expenses even though Robert didn't maintain a dedicated office space, and many of the claimed expenses seemed excessive compared to his actual business costs. Mr. Williams, the IRS allows business owners to deduct 100% of vehicle costs, unlimited meal expenses for business travel, professional clothing, and home office expenses for any space used for business purposes. Martinez continued with apparent IRS regulation knowledge and business expense authority. Most drivers significantly underestimate their legitimate business deductions because they don't realize how broadly the IRS defines business expenses for independent contractors. Martinez prepared Robert's return claiming $15,400 in business deductions, which was significantly more than the $6,200 in actual documented business expenses that Robert had tracked throughout the year. Robert was pleased about the larger refund, but was concerned that the claimed deductions seemed much higher than his actual business expenses and might not be supported by his documentation and records. "The business deductions seem higher than my actual expenses," Robert explained to Martinez. "I kept track of my costs throughout the year, and the total was closer to $6,200, not the $15,400 you're claiming on my return." Martinez dismissed Robert's concerns about documentation, claiming that the IRS allowed estimated business expenses for independent contractors and that precise record-keeping wasn't required for legitimate business deductions. Mr. Williams, the IRS recognizes that independent contractors often have business expenses that are difficult to document precisely, so they allow reasonable estimates based on industry standards. Martinez insisted with apparent IRS policy knowledge and estimation procedures. "Your actual tracked expenses represent only a portion of your legitimate business costs, and our analysis identifies additional expenses that qualify under IRS regulations." Martinez also claimed that Robert's conservative expense tracking was causing him to miss legitimate deductions and that the inflated amounts were actually more accurate representations of his true business costs. Robert felt uncomfortable with Martinez's explanations about estimated expenses and decided to research business deduction requirements and documentation standards before authorizing filing with potentially excessive deduction claims. Robert contacted the IRS to verify business deduction requirements for independent contractors and learned that legitimate business deductions must be ordinary, necessary, and properly documented with receipts and records. Robert also discovered that claiming excessive or fraudulent business deductions could result in substantial penalties, interest charges, and potential prosecution for tax fraud during IRS audits or investigations. Robert realized that Martinez was inflating his business deductions beyond his actual expenses in ways that could expose him to serious legal and financial consequences if audited by the IRS. Robert contacted Martinez to request correction of his tax return to reflect only his actual documented business expenses, but was told that reducing the deductions would require additional fees and would significantly reduce his expected refund. Robert reported the fraudulent business deduction preparation to the IRS, his state's tax agency, and the Better Business Bureau. He learned that inflated expense schemes often target independent contractors by promising large refunds through excessive business deduction claims. The authorities explained that legitimate business deductions require proper documentation and that taxpayers are responsible for the accuracy of their returns regardless of preparer errors or fraudulent claims. Robert learned that independent contractors should maintain detailed records of actual business expenses and should be suspicious of any preparer who claims deductions significantly higher than documented costs. The experience taught Robert to understand business deduction requirements and to question any preparer who dramatically increases expected refunds through deduction claims that exceed actual documented business expenses. Robert now educates other truck drivers about fraudulent business deduction schemes and emphasizes the importance of maintaining accurate expense records and claiming only legitimate, documented business deductions on tax returns. Patricia, a 29-year-old social worker, received an email about stimulus payment recovery that would test her knowledge of legitimate government payments and teach her valuable lessons about fake stimulus recovery scams targeting individuals who might have missed economic impact payments. The email claimed she was entitled to unclaimed stimulus money. Patricia had received her stimulus payments during the pandemic through direct deposit and hadn't experienced any problems with the payment processing, so she was surprised to receive an email claiming that she had unclaimed stimulus funds available. The email appeared to be from the Economic Impact Payment Recovery Center and claimed that processing errors had prevented some eligible individuals from receiving their full stimulus payments, requiring active recovery efforts to claim missing funds. Dear Ms. Johnson, our records indicate that you may be entitled to unclaimed economic impact payment funds totaling $1,400 that were not distributed due to processing errors in the federal payment system. The email stated with apparent government payment authority and error correction procedures. The Economic Impact Payment Recovery Center was established to identify and distribute these unclaimed payments to eligible individuals before they're transferred to the Treasury Department's Unclaimed Funds Program. The email explained that stimulus payment processing had been complex and that some eligible individuals had received partial payments or no payments due to database errors, address changes, or banking information problems during the distribution process. The federal stimulus payment distribution involved multiple payment systems and eligibility databases that resulted in some processing errors, preventing eligible individuals from receiving their complete economic impact payment amounts. The email continued with apparent payment system knowledge and error identification procedures. The Recovery Center reviews these cases and ensures that eligible individuals receive any underpaid or missing stimulus funds before they become permanently unclaimed. The email instructed Patricia to click a link to verify her eligibility and complete a recovery application that would process her unclaimed stimulus payment within 5 to 7 business days after verification. Patricia was interested in verifying whether she had actually missed any stimulus payments, but was cautious about clicking links in emails claiming government payment recovery, especially since she believed she had received all eligible payments. Patricia decided to research stimulus payment recovery procedures and verify whether legitimate government recovery programs existed for unclaimed economic impact payments before clicking any links or providing personal information. Patricia contacted the IRS directly to inquire about stimulus payment recovery and learned that individuals who missed stimulus payments could claim them as recovery rebate credits on their tax returns, but that no separate recovery center existed for unclaimed payments. The IRS representative explained that legitimate stimulus payment issues are resolved through the normal tax return process, and that the agency doesn't operate separate recovery centers or send emails about unclaimed stimulus funds. Patricia also learned that scammers often use fake government payment recovery programs to steal personal information and that legitimate government communications come through official mail rather than unsolicited emails. Patricia realized that the email was from scammers who were using fake stimulus recovery programs to collect personal information from individuals who might believe they were entitled to additional government payments. Patricia forwarded the phishing email to the IRS fraud reporting system and learned that stimulus payment scams were common and often targeted individuals by claiming processing errors or unclaimed funds that required personal information to recover. Patricia also reported the scam to the Federal Trade Commission and her state's Attorney General office. She learned that fake government payment recovery scams often increase during tax season when people are thinking about government payments and tax refunds. The authorities explained that legitimate government payment issues are resolved through official agencies and established procedures, and that recovery programs don't require personal information through email links or unsecured websites. Patricia learned that individuals who believe they missed government payments should contact the relevant agencies directly through official channels rather than responding to unsolicited emails claiming recovery opportunities. The experience taught Patricia to verify government payment information through official agency resources and to be suspicious of any email claiming unclaimed government funds that require personal information for recovery. Patricia now educates other social workers about fake government payment recovery scams and emphasizes the importance of verifying payment issues through official government channels rather than responding to unsolicited emails claiming unclaimed funds. Kevin, a 34-year-old electrician, encountered a tax preparer who would test his knowledge of legitimate tax filing procedures and teach him valuable lessons about identity theft through tax preparation services and fraudulent return filing schemes. The preparer requested extensive personal information beyond what seemed necessary for basic tax preparation. Kevin had straightforward taxes with W-2 income from his electrical contracting work and was seeking professional tax preparation to ensure accuracy and maximize his legitimate deductions for tools and equipment expenses. The tax preparer, who identified himself as professional tax consultant Clark, immediately requested extensive personal and financial information, including Social Security numbers for Kevin's entire family, bank account information, investment account details, and previous tax returns from multiple years. Mr. Taylor, comprehensive tax preparation requires complete financial analysis to ensure maximum refund optimization and proper deduction identification, Clark said, with apparent comprehensive preparation expertise and financial analysis procedures. Professional tax services involve detailed review of your complete financial picture to identify all legitimate tax benefits and ensure compliance with current regulations. Clark claimed that the extensive information was necessary for identity verification, accuracy checking, and preparation of related tax documents that might benefit Kevin's overall tax situation, including potential amended returns for previous years. Mr. Taylor, professional tax preparation involves cross-referencing multiple years of tax data to identify missed deductions and potential amendment opportunities that can result in additional refunds from previous tax years. Clark continued, with apparent multi-year analysis expertise and refund recovery procedures. Complete financial information allows us to prepare comprehensive tax strategies that maximize both current and past year tax benefits. Clark also requested copies of Kevin's driver's license, Social Security card, and birth certificate for identity verification purposes that he claimed were required by new federal tax preparation regulations. Kevin was willing to provide necessary information for legitimate tax preparation, but was concerned that Clark was requesting far more personal information than seemed necessary for preparing his current year tax return. "I'm willing to provide information needed for my current tax return, but I'm not comfortable giving you bank account details and previous tax returns for what should be basic tax preparation," Kevin explained to Clark. "Can you prepare my current year return without requiring access to my complete financial history?" Clark became insistent when Kevin questioned the information requirements, claiming that professional tax preparation required comprehensive financial analysis and that limiting access to his financial information would prevent identification of valuable deductions and credits. Mr. Taylor, professional tax preparation involves advanced analysis techniques that require complete financial information to ensure optimal tax outcomes, Clark insisted, with apparent professional standards and analysis requirements. If you don't provide comprehensive financial access, you'll receive basic tax preparation that misses valuable opportunities for refund maximization and deduction optimization. Clark also claimed that new federal regulations required extensive identity verification for tax preparation services and that providing limited information would prevent him from filing Kevin's return electronically or claiming certain deductions. Kevin felt pressured by Clark's claims about missed opportunities, but decided to leave and research legitimate tax preparation requirements before providing extensive personal and financial information. Kevin contacted the IRS to verify tax preparation requirements and learned that legitimate tax preparation only requires current year tax documents and basic personal information, not extensive financial history or identity documents. Kevin also researched Clark's credentials and discovered that he was not enrolled with the IRS as an authorized tax preparer and had no professional tax preparation certifications or licensing. Kevin realized that Clark was using fraudulent tax preparation services to collect extensive personal information that could be used for identity theft, fraudulent account openings, or filing fraudulent tax returns using stolen information. Kevin reported the fraudulent tax preparation service to the IRS, the Federal Trade Commission, and local law enforcement. He learned that identity theft through tax preparation is common and often involves unlicensed preparers requesting unnecessary personal information. The authorities explained that legitimate tax preparers only need current year tax documents and basic personal information, and that requests for extensive financial history or identity documents are red flags for potential fraud. Kevin learned that taxpayers should verify tax preparer credentials through IRS databases and should be suspicious of any preparer requesting extensive personal information beyond what's necessary for current year tax preparation. The experience taught Kevin to research tax preparer qualifications and to question any preparer who requests extensive personal information that doesn't seem directly related to current year tax preparation needs. Kevin now educates other electricians about identity theft through tax preparation and emphasizes the importance of working only with IRS-enrolled tax preparers who request appropriate information for legitimate tax preparation services.